Hello, everyone, and welcome to Tech Tuesday. It's the first Tech Tuesday of 2026. And it's that time of year again. It's time to do taxes. So we're going to reboot a little bit of talking about XERO accounting software, but we're going to talk about it a little bit more specifically with regard to taxes. Full disclaimer here, we're not going to give you tax advice. We're not a CPA. I'm not a tax accountant, but I have spent a lot of my career working in finance and a lot of different types of businesses. And so what we can give you today is a way to better understand how to record things properly in your accounting software so that you can easily give it over to your tax accountant to more quickly get your taxes done this year. And as every year, there's lots of changes to the tax rules. So it's important that you give your tax accountant the best, up-to-date information that you can, and that you're segregating it when you need to and consolidating when possible. So we're going to talk specifically about sort of the coaching, consulting, author type business, and the type of revenue streams and expenses we might have there. And we're going to jump right into the XERO software, and we're going to show you that demo company that we did last time. So let's get the slides up here so you guys can see what is going on today. You can do it. I know you can. There we go. And of course, Canva had to change all the links again, so you cannot find how to even just present. There we go. There we go. Thank you, Zoom. And Canva for making really basic stuff really complicated. All right, so if you guys are already in the Business Foundations Collective, you'll be able to jump over there and under the Software 101 section, there is already some basics around how to use accounting software and how to use XERO in specifics. Right now, again, they're having a pretty good sale. This is usually the time of year, which is a great time to get your accounting updated. Even if you didn't do anything last year, but you're trying to get stuff ready for your tax accountant, this is a good time to get that stuff set up. And we're going to show you kind of how to jump in there. So if you missed that lesson, just jump right over to the replays section of Tech Tuesday, and you'll be able to find that there. And in the link to this video, we'll also share the latest affiliate for XERO. So if you're interested in getting the software, you can check it out. So today we're going to talk about specifically how to record your expenses and your revenue in such a way that you're getting ready for tax season. When you're dealing with your accountant, your regular CPA, or maybe if you're doing it just with a bookkeeper on a monthly basis, you may not maybe think of all this granularity, and it may not make sense like day to day when you're just trying to manage your business expenses. But I'll tell you, there are a lot of benefits to doing this for the long term. And so we want to talk a little bit about that today. So once again, this training is purely for demonstration purposes with the goal of learning the XERO accounting software and preparing your business finances in order to get them to a professional. But any tax information provided is really just coming from a financial standpoint, but you should always consult your tax professional regarding your specific business. And again, we're based here in the US, although I do have knowledge about some international accounting. Definitely, if you are in another country, XERO works in lots of different companies all around the globe. So the software is still good, but the specific accounting rules may be slightly different. So let's talk about revenue. So I know all the cool influencers on TikTok and YouTube are always talking about affiliate revenue. And for some of us, that is still a baseline of money that's coming into our business and helps us because it's something we're not doing all the heavy lifting on all the time. But one thing I want to caution you about is there is still some talk, at least here in the US, about possibly changing some of the rules around how those things are recorded. One, because as soon as we start doing well, they want to take take it all away. So you need to be careful that we're trying to separate out any of our affiliate revenue from other coaching or earned revenue that we earn on a regular basis. It may not matter that much right now, but it may also matter if you're trying to get a loan, if you're applying for grants, if you're looking for partners to kind of collaborate with. They're going to want to know how much revenue are you actually earning from your expertise. Affiliate revenue is great, and it is a great way for us to kind of keep the lights on, maybe if we get sick or we just want to take a vacation. But it is a commission base or a referral engine. It isn't necessarily off of our expertise. So coaching revenue comes in lots of different varieties. There's all kind of stuff that we're doing out there and new things that we're creating every day. But essentially think of coaching revenue as yours. It really showcases your expertise, and it's earned directly from you providing that service. This could be anything from, let's say, group sessions. It could be one-on-one. It can be paid workshops like this. It can be regular reoccurring memberships. It can even be things like an in-person retreat. And if speaking is part of your business as well, when I go out and do any consulting and speaking, then my speaker fees also count as coaching revenue. Now, yes, to start out, when you have a very kind of simplistic way of bringing in money, you may group all of these things into coaching revenue. But as you continue to grow and scale, you're going to want to split these out into sub accounts in revenue so that you can say, oh, I specifically earned this much from speaking. I earned this much from, let's say, coaching, and this from sort of other general memberships or events and things that I did. One, it allows you to track better how you're actually performing. One of the hard things is if you have everything all lumped into one and you go and pull a report, you don't know what did better than the other thing. It's all just sort of one big number. And if that number looks bigger, cool. But when you go and say, okay, well, how do I do better this year? You're not really sure where to focus. And this gives you an idea of, okay, well, if coaching revenue wasn't as good maybe last year or last quarter, and you want to increase coaching revenue, then it gives you an idea of how many more coaching clients you need to bring in to get a percentage increase. Same thing with, let's say, a membership, that's kind of a good baseline that you should have on a rolling basis. But you're not going to get those big lump sums like you do with a speaker fee when you go speak at a big conference or association. So different things are going to give you kind of lumpy looks of how everything is. And when you're looking at it in this annual view, everything's going to be sort of jumbled together. But I highly encourage all my clients to make sure at least once a month you are going into your books and you are looking at this on a regular basis so you can see how you're actually performing. And also making sure you're getting paid, because for some of us, we're sending invoices for things. Maybe we're getting paid in some sort of installments, and you need to make sure that those are going through so that you fully recognize the revenue for the work that you're doing. The other side is affiliate revenue. So for this example, I am an affiliate for XERO Accounting Software. So if you guys choose to use my affiliate link to get the software, then I'll get 2 nickels to rub together or whatever the commission is on my side. A lot of times affiliate revenue is not a lot. I even offer affiliate revenue to people that promote my services. So if people promote my coaching programs, they can earn between 10 and 20% of whatever that coaching fee is. That helps me. And it's a great way for all of us to earn money, because then we are basically becoming the advertisement, the marketing for those businesses. It's a lot more personal than just say, watching a commercial in the Super Bowl, which you may never buy that product. So it is a good way for us to kind of build that trust, not only, for other people referring us, but for us to refer them. And the more affiliate commissions you earn because your audience is similar to someone else's audience, the more likely those partners are going to want to keep signing you up to help them with their affiliate programs. And so there's a couple different types of affiliate revenue. Let's say I'm also an affiliate for Amazon. And so if I recommend products on Amazon, including my own books, I can also earn an affiliate commission through there for those things, assuming people are using my specific links. The easier way of tracking a lot of times is for these partner programs. If I go through a partner program with someone like we recommend recommended James Lamb last month, then usually you get cookied and it lasts a little bit longer, so that maybe if you don't buy something from that person right then, and you buy something from them later on, maybe 60, 90 days later, I will still get credit for that commission later on. So this is another reason why we talk about affiliate revenue as being somewhat borrowed. One, it's not always an immediate return on investment. Just because you went and sent a marketing email or posted a blog about a product or made a YouTube video, it may take a while for people to find that material, to actually click that link, and to make a decision to buy that software. Also, the hard part is it could be 15 other videos that they watched, and it may not be yours that they clicked on in order to actually do that final purchase. So affiliate revenue, a lot of times we call it kind of secondary revenue, or borrowed income, because it's not always something that you can rely on steadily. You're kind of dependent on your audience reacting to that material, and then, actually resonating with whatever it is that you're trying to sell. You may already have an accounting software that you're very happy with, and so you may not use my link, but you may still use my expertise from this coaching in order to better understand how to use any piece of accounting software that you might be using. So these are kind of two big contrasts. We'll talk about a third one here in a second, and we'll actually go into the software to talk about recording it. But these are just things I want you to think about. There will always be sort of one big bucket of revenue where it may just say sales, and then you can make sub accounts or sub buckets in order to categorize these things as they come in from your bank account or from Stripe or PayPal or however you're getting paid for these different things. Oh, one more thing on this, just to talk about the affiliate revenue. As you're getting ready to do taxes, if you're getting paid affiliate commissions from people, they will generally be sending you a 1099. There's a bunch of different types of 1099s here in the United States, but a 1099 that says you've got commission-based revenue, and usually you have to earn more than $600, I think is the current threshold, in order to actually get those. So if you just earned, a couple of bucks here and there, you probably won't get a 1099 from people. But once you earn over 600, you usually get that report. That other part of being important of having it in your software is when you go to give your tax accountant that paper 1099 or the digital copy, it needs to match something that's in your system. And so if you ever get audited, you need to be able to say, oh, okay, well, this specific type of revenue from this client came in through, this particular way, and I can track that affiliate revenue, and those numbers all tie out. So that one gives you kind of another receipt, let's say, in order to track not just, let's say expenses, which is normally when we have receipts, but in this case, you should have a kind of receipt, a 1099 for your affiliate revenue. All right, so let's talk about expenses. The other piece is when you separate out the revenue, it makes it easier to track the associated expenses in having to actually do those things as a part of your business. So let's take today's example of when I do coaching and I'm here on Zoom. Zoom is a business expense. In order for me to have the right type of account to be able to, have so many people in and more than so many minutes. And then there's even bigger ones if I have maybe a webinar over 100 people. I also need to be able to contact you guys and tell you guys that these events are happening. So something like a CRM to be able to track people. And then if you guys came through our community and Mighty Networks, right, that's another expense of a platform fee that I use in order to make sure my community knows what's going on and has access to my coaching materials. There may be other things that happen. So after this video finishes recording, it needs to go to the editor and my assistant needs to get it uploaded into Mighty Networks. So now we have sort of people hours that might be in there as expenses for non-employee income, basically, that they are helping to run the business and do activities that maybe you're not doing yourself. And then we just got back from the marketers cruise. So sometimes when I go to speaking events, if they are not right here, or I'm going to conferences or educational programming for myself, then traveling to events can be another expense related to coaching revenue or speaking fees in that case. So think about all those things that you might be doing and make sure that you're accounting for these things as far as expenses. Now, there isn't necessarily going to be a way to divide those expenses, but again, all these times you're always wanting to prepare for, touch wood, that you never get audited. But if you do, you can justify these expenses directly relating to you as a business owner doing these things. If you have a bunch of expenses in there that just look like you're running a hobby and you just like to do nice things and travel around, and you're not really earning any revenue while you're doing those activities, it's going to look suspicious, and then you're probably going to be likely, to get audited. The other side is the affiliate revenue. So there are expenses related specifically to that. One of our other Tech Tuesdays we did was around, affiliate marketing through Thrivecart. Perfectly great software. Maybe, in the beginning I bought it for a lifetime license and I could expense it then. But now I've done some upgrades. And so I do have an annual expense that goes with that. The other thing is, in order to get affiliate revenue, you usually have to do some sort of marketing. That could be just organic traffic that you're using through marketing tools, funnels, landing pages, all sorts of things like that, or social media. But it could also be paid traffic like ads. And so then those expenses can be directly related to trying to drive traffic towards those affiliate things that you are promoting. So think about those types of things and making sure that if there's other expenses that you are doing that are different from coaching, moreover related to your affiliate revenue, that those are also tracked. These are just a very small example of the things that could be in there, but it gives you an idea of kind of what those grouping things might be and making sure that you're accounting for them in the software. All right. Well, the other big bucket I wanted to talk about is, well, I'm launching a book on February 25th. We are not going to have a Tech Tuesday, a second one this month, because we're busy with the book launch. So, as a part of my wonderful writing group, The Writing Journey here in Chicago, our next anthology is available soon, called Awakening, the Unreal, Untold, Unexpected. So I love being a part of the writing journey and having other writers to work with. And since I have so many writers in our community that may be writing maybe fiction books like this, or maybe nonfiction books related to their coaching, I wanted to talk a little bit about the accounting for your books and how to make sure that that is in there. Because now you have a physical product, it is a little bit different in how you might account for it. And there are important reasons why you would want to separate this stuff out again from the service delivery of coaching or the marketing-based referral business with affiliates. So with books or with physical products, a lot of times you will have something called cost of goods sold. This is really talking about what did it take to make that physical product. And, in the days of sort of big manufacturing or making a car or widgets or whatever all the things are that we like to make up in these examples, there is always something that went into making the good itself. The reason you want to understand that is because you want to understand the profitability of an individual piece of the product, that you're setting the price at the right level, you're selling it into the right markets, and you understand that you're not giving it a price that is below what it takes to actually create that thing. Books are kind of a strange thing because most of those goods are going into that initial production of the book. And then once the book is made, the print costs or the digital delivery costs really aren't that much of it. But because you have so much upfront costs, it's really important that as you're doing those things in book creation, you account for these things as cost of goods sold, because the accounting is slightly different rather than just general expenses. So let's talk about those kind of big lump sum expenses that go with books. Now, COGS, a lot of times, cost of goods sold is abbreviated as COGS. It's silly, but I put the picture there just to kind of remind you what COGS actually stands for. But as you are writing, you need to have good editing, lots of different types of editing. And so if you are paying different editors in order to contribute to that process, you want to make sure that those expenses are counted. Proofreading, that's a different type of editing that is nothing like, kind of the line editing and the editorial editing that happens within the context of everything that you're reading. It's did I spell things right? Do I have my periods and commas in the right places? Are things like on the page visually correct? So this includes things like also cover design, that beautiful cover that we created for our anthology, any of that interior formatting, even your ISBN, because you have to have that in order to mark a book for sale. And then, of course, right, including your print costs, including even getting your author copy print proof that says, not for resale when you go and do some of that actual physical checking. And don't forget, if you do an audiobook, that can also be included in your cost of goods sold. My first audiobook, I went downtown and I actually used a studio, had a professional, audio editor, get everything ready to go on Amazon. That worked a lot better. And then those costs will directly offset the revenue that I earn from the audiobook. Versus once the book is ready to go, now you start talking about just general expenses, just like we talked about with, coaching or with affiliates. You may have expenses related to, having social media tools, or maybe running ads on Amazon or other places in order to drive traffic to your book. Maybe you go to an author event and you need to pay for a booth fee. Maybe you need software like Adobe or Scrivener, or I'm now using Pro Writing Aid. Any of those pieces of software are going to be expenses that are ongoing, that you kind of have after the book is finished. It's not contributing to the creation of the product with your intellectual property. This is sort of marketing the thing after it's made. And this also includes shipping to customers. So let's say you've got a TikTok shop and you are sending stuff to customers. Those are really expenses. That's not a cost of goods sold. So these are just some of the ideas of what goes into kind of a book, and you can differentiate the cost of goods sold versus expenses. And I will stop share for a second and I will pop over to XERO and see if there's any questions while we go to kind of the live software demo. All right, and away we go. So if you'll remember from the other one, or if you didn't watch the other one yet, the nice thing I like about XERO is if you're not really familiar with how to set stuff up, there is a demo company that everyone has access to when you create your account. So if you want to play around with the software a little bit and understand how to use it, then you can use this. This is always some like new made up information. None of this is real. Nothing happens if you do anything with it. It is just for you to practice individually when you log in. I think it's a fantastic way for people to get started with accounting software and not worry that they're doing the wrong thing when they're trying to learn where stuff goes. So right now it kind of has some big buckets here on the dashboard, and it has a made up checking account, a made up savings account. It talks about the invoices that need to be paid. It even recommends some tasks that need to be done, bills to be paid, invoices that came in and got paid, and then sort of showing your cash in and cash out. I don't know how they make up all this stuff, but it's kind of cool. And then it'll kind of even show you some of your general accounts, that you can watch the general balances, and you can see not only monthly, but year to date where some of those things are at. So I'm going to go over here and you can see it says go to the income statement report. Sometimes people get a little bit confused because income statement can be called different things. It can be called income statement. It can be called a profit and loss statement. People can abbreviate profit and loss to P&L. So all those things are the same thing. And that's really the main report that you need to know to get ready for your taxes. One thing I always tell people is once a month when you get in here, I recommend you go to the income statement, the P&L, and for whatever period that you're looking at, this fake period is the beginning of this fiscal year, calendar year, depending on which way you're going. Go ahead and print or download, into Excel, this first version before you touch anything. One of the things people always get worried about is like, well, what if I do something wrong? I don't know how to fix it. Well, here's a nice way that at least you have a baseline before you started touching things. And again, if you have a bookkeeper, they can help you do a lot of these things, but it gives you a good baseline. So that way, you know what you need to get back to if for some reason you really mess something up. It's usually not too bad. Usually you can kind of check and see, and some number will be like really crazy out of whack. So let's say I printed this and my dues and subscriptions right here was about $15 on that first version. And then all of a sudden, when I went to print it after an hour of playing around in here, and it comes out at like, $17,000 or something, then you have a quick visual clue that says, oh, I think I categorized something incorrectly in that bucket. If I'm paying $17,000 for software, we have a problem. Unless it's really, really good software. But this just kind of gives you an idea of what's in here and what to do. So since we're going to pretend that we're going back to tax year, I want to show you that you can easily go to this drop down and it will allow you to go to last fiscal year with just a click of a button. And so you don't really need to worry about, putting all the dates in exactly and stuff. It should just put the fiscal year there. You can also go by quarter. I highly recommend looking at it at least once a quarter. And if you haven't done so after the end of this meeting, start putting a monthly check-in on your books that says for at least an hour or two, you go in and you reconcile your software account and make sure things are up to date, so that as things are happening, as expenses are coming in, as revenue is coming in, you are looking at it and you're making sure, one, you're collecting revenue as soon as you possibly can to bring it into your company and get yourself paid. And two, you're keeping an eye on expenses, and that when things start getting out of control and they're not matching up to that revenue, you can also look to cut back. So here you can see this particular fake business isn't broken down into a lot of categories. So when I look at income, income is revenue, sales is revenue. Again, lots of names for the same thing. They just have all the sales stuff bucked like into one big bucket. The nice thing here too is you can also click on the numbers and it'll give you kind of a more detailed report if you want to look at all the fake, invoices and stuff of what came in and what that was. And so this kind of says, oh, it's a retainer for some sort of consulting work, some other training that you did. And it'll show you line by line, including any reference numbers or when those sales were made. And then you can just click back and you'll go right back to the same income statement that you already looked in. So when you print this first version and you take a look at it, and again, it'll make more sense when it's your own numbers. A lot of this stuff should be automatically coming in. If you followed our report, our training for how to kind of set your bank account up, how to connect Stripe and PayPal and any of those other accounts you might have, a lot of this stuff should just be flowing back and forth automatically. You might have to approve it and maybe say specifically what something might have been for, but generally the amounts are going to be in here and just need to be reconciled. So in this particular example, it doesn't necessarily have a cost of goods sold. These are all kind of consulting type incomes that they're recording. But what would happen is above this sort of gross profit area, this is where your cost of goods sold would be. So for those books, if let's say I'm recording those cost of goods in say 2025, because that's when I wrote the book, edited the book, created all those internal materials, I may not have that revenue yet. I haven't finished the book to launch it and be able to actually sell it. So it's good to make sure that you can kind of recognize those expenses in the year that they happen, and hopefully have a nice long tail of book revenue for many years to come. And then let's talk about all the expenses. The cat wandered in. Evidently, she was excited about accounting too. So there's lots of different expenses in here. Most of these are going to get grouped into a handful of categories when it comes to your taxes. But for, again, your own purposes of managing your books, I recommend you kind of split things out as best you can. You definitely want to split out when you're paying, let's say, for advertising or marketing, that those things go separately from, just sort of general subscriptions and dues. So let's give an example. Let's say, you're running Facebook ads. You're going to want to put that into advertising. But if you have a subscription for, let's say, Canva to create the graphics that are going to go into those ads, or Descript in order to edit the videos, then you want to put those under dues and subscriptions. I feel like most time the categories are fairly obvious as to where things go. And there's lots of other things that you can record in here depending on the type of business. And again, lining it up with the revenue that you're earning. Your phone, if you're using your cell phone a lot, or you're just generally, running internet into your office, it's really tough to do business these days without it. You should definitely be including those expenses on a monthly basis. Travel is kind of one of the sticky ones where, again, you need to make sure that you're actually traveling to work events, not just going on vacation with the kids and Mickey and Minnie are there hanging out with you. And sometimes maybe you make a video. And then including, sort of utilities and things. If you have a home office, there's also usually a way to calculate the square footage of your office versus how much is in the entire house to kind of account for something like rent, because you're probably not specifically paying rent for your office if you're physically located in your house. But you might be paying some portion of, I've got to have the lights on, I've got to turn my computer on. Yeah, I may take a phone call with my cell phone, I've got to have internet. All those expenses and things that are related to having your home office, those should be included in sort of the general running expenses for your business. This one, interestingly enough, has janitorial expenses. So I guess if you have a housekeeper, maybe you can expense that too. Definitely check with your accountant on that one, because that would be a good, a very helpful one. One less thing to do so we can focus on our business. And then printing and stationery. So a lot of times when I do in-person events, I need to print not just business cards, but flyers for my next coaching program, or things related to books that are launching or places I'm going to be speaking next. So if you have any kind of print costs, can go there. So I like this. It's pretty straightforward, I think, of what's going in there, but let's just go back to the dashboard just to kind of show you how, when you reconcile those things, go in. And again, it's a demo company, so I don't really know what's all in here, but let's say I'm going to go into the fake checking account and we're going to reconcile a couple of items, and then we're going to see how that changed over time when we go back into there. They've got all kind of new AI tools I have not even used yet, but let's see if we can filter based on date. Let's put the date as December of 25, because really right now we want to make sure that it's something old. Oh, it looks like it may not have anything off that old. It was worth a try. Because it's a fake company, they may not keep a lot of stuff in here, and it is already like a month into it. There's a lot of things for like parking in here. So one thing I like too is you can see the difference of, see how this particular one is green. This means probably that you already had a rule set up and it's a reoccurring cost. So for things like, I don't know, Amazon Prime or a subscription to something that you pay for on a regular basis, you can create rules so it will automatically sort of semi-match it and just say, oh, okay, yep, that's correct. I can go ahead and click OK. I would probably create a rule for something like this. For City Central parking, looks like they do that quite a lot. So we're going to go into options and we're going to create a rule around that. So we want the payee is going to equal City Central parking, and the line item is going to say parking. And this should generally go into travel expense. You might have automobile expense if you want to make it specific. And we don't necessarily need that on there. We want it to be not taxable. Oh, this is for allocating the line items. Let's do this differently. Delete. And let's put this under auto. And this is 100%. So the difference here is, if you have a line item that's like a fixed value and you know a certain amount is going to get allocated all the time, you can do fixed dollar. But for this one, basically 100% of the parking thing is going to go in here. So anything that is from this particular City Central parking and this fake bank account, and you can say equals, but you can also say contains. I like sometimes, because sometimes the bank will send new or different information in there, and contains will help it match more often. And it may match things that say, you know, just generally parking if you want to. And we want it to go to a specific contact. And it looks like that particular parking place is not an existing contact. So if you want to, for some reason, track how much we're parking there, then you can create a new contact there too. So we're going to run this on the checking account, and it will go run it right now. And let's see if it worked. This will help speed up. Now you can see already some other things were kind of self-matching, and And let's see if we can go back to where those parking things were. There's one. And so you can see that it applied the rule. And so that way you can more quickly have some of the stuff go in there. Here's some more of that, whatever the periodicals thing was, more parking, more parking. So most of those things with the parking were pretty inexpensive, but now I've done a couple of them all together. So one of the things I want to go do is go back to that reporting. We're going to go to our income statement. And now under automobile expense, you can see now there's quite a bit more in there. It's now at 607. And if I click on those blue numbers, it should pop up all those new transactions that we just put in there for central city parking at 12 bucks a piece. Pretty cool, right? This saves you a ton of time. And if you have reoccurring things that you're probably paying all the time, it makes it much easier to record, and it makes sure that you're not making mistakes. That once you and your tax accountant or your bookkeeper help you decide which category things go into, like I would know probably if I'm getting something at Staples, it's probably an office supply expense. So it's going to go into there. It might be printing and stationery. And again, depending on what you're doing, you may or may not need to separate those things out. But this just gives you kind of a quick view of what to do with your profit and loss statement, what things you might be looking for in there, and how a XERO software might be helpful for you. This is a type of class that we have as a part of the Entrepreneur's MBA. MBA stands for Mindset, Business Strategy, and Accountability. We go deeper into these types of things with case studies. We talk about people's actual businesses with real numbers, real figures, so that as you're trying to learn how to do your business, you can better understand what's going on, not with fake company numbers like this, but that we actually make sure you're moving your business forward and you're tracking the real numbers of what's happening and making clear, concrete, strategic plans in order to continue making those improvements. So if you're interested in learning more about Entrepreneurs MBA, we'll drop the links in the chat below. We're always enrolling new students, and there's a ton of great recordings to more in-depth lessons on things like this. These are all the wonderful free materials. And if you'd like to continue being a part of just Business Foundations Collective, we are always welcoming new members to the free side of the house. There's tons of free training on software like XERO, like ThriveCart, like many of the things that we've talked about today. And you can go and take those at any time at your leisure, and often come to live sessions like this so you can get your questions answered. We're looking to do, I think, some more financial stuff as we get into March, because people are still working on probably maybe their personal taxes, maybe not their business taxes, depends on what people's filing deadlines on. And so we might have some guest coaches coming in to join us for that fun. I think that's all for today. We'll just give it a second to see if anybody else has some questions, and I will hit pause on the recording.